We want to start our discussion with Shein and the potential for it to come to Hong Kong. Now, with this confidential filing, it's a little bit curious to me because this is usually reserved for listed companies or for the Hong Kong Stock Exchange. They broadened this out to include tech companies. But how is it that, if they did, that Shein filed for a confidential listing in the Hong Kong market?
Well, I mean, the confidential listing is open to everyone. I mean, Shein is, in our opinion, is following the same IPO cautious format that it has done when it first decided to list in the U.S. It also filed a confidential listing in the U.S. market, which was rejected due to geopolitical bottlenecks. And it also did the same thing, going into London. It also did file a confidential listing in London, which potentially got approved by the UK FCA, Financial Conduct Authority, but however, that was blocked by the Chinese regulators. So I think the confidential listing the company's file is in line with what it has done, for the past 2 years.
So we've been waiting for them. Shein filed for a listing in London. It was about 18 months ago, and then now reportedly in Hong Kong as well. Do you think that this move would pressure London to say, oh, look, you're going to miss out on this? Which would be the preferred market for Shein?
I think, initially the preferred market, the first and foremost market for Shein should have been the first choice, should have been the Hong Kong market. That should have been the preferred market, because the company initially has started on a great path with coordination with the regulators, but it was kind of surprising that it chose to go to the U.S. I don't think Shein, considering Hong Kong now, would pressure London. I mean, although London has under pressure because of low showing the IPO, but no company can pressure London with the decision. London has already made the decision. So it was blocked by the Chinese regulators. So that, in my opinion, that would not pressure London. And if Shein would have decided to go forward after being rejected, but after being blocked by the Chinese regulators, you may see a potential similar outcome to what happened to Didi. Didi was not given a go-ahead, and initially went ahead with the New York IPO, which is eventually end up being a company being delisted. So I don't think Shein is in any position to pressure London.
So do you think that the holdup here is the CSRC, and that at the end of the day they would prefer it to be a Hong Kong listing, especially with all that the government is doing in terms of its policies to boost domestic consumption? One of those methods is by boosting the stock market.
I think in my opinion, the Hong Kong is ideal for the CSRC because it also, in our opinion, eliminates a major, bottleneck, right, which is the geopolitical trade war regarding, Shein, activities, regarding labor activities, regarding Shein, supply chains, and so on. This would probably eliminate the conversation around that if Shein decides to, or even accepted to go to a Hong Kong listing. If they listed in the U.S., which was rejected, listed in London, with that conversation, which is the CSRC, or even the regulators, or even the Chinese government do not want to continue to have, that would probably go away by listing in Hong Kong.